Good morning, students. Our session of Business Management 3. As far as our previous session was concerned, in that we have discussed about the introduction of modern banking, its meaning, then after need and importance of modern banking, then after we have seen different types of accounts. Now today we'll discuss further. So the first topic is types of account holders, means those persons or who are able to open a bank or any kind of accounts with any bank. So there is a list of account holder. The first one, that is account of individual. Any common man is able to open a normal account, that is a simple saving accounts with bank. The second one is joint account. Joint account means here the right is given to both the person, so jointly they can able to operate the accounts in a proper manner. So joint account is going to be open by anyone in any bank. Third one, accounts of salarized person. Yes, the person who is getting a regular monthly salary, they are able to open the account. But actually, the salarized person themselves is not going to open the account, but the institute, they are going to open the account on the behalf of salarized person. Fourth one, account of sole proprietorship. Any shop or any person who is doing business on the basis of their own, so they are able to open their account. Fifth one, that is accounts of partnership firms. Sixth one, accounts of joint stock company. And the last one is account of trust. So anyone or any type of organization, they are able to open accounts with bank as per their requirement or as per their need. So this is really very simple topic. No further discussion is required in that. So let's move further. Passbook. Passbook is a formal written statement of our transaction in any of the accounts. પાસબુક આપણે બધાએ જોયેલી જ છે. As we all know very well that in passbook the bank is going to give two types of entry. If we are going to deposit something, then the same amount is going to be credited in our account. And if a particular sum of money is going to withdraw by us, then the same money is going to debited in our account. So passbook is nothing but it is a written statement. It is a formal copy which is given by bank, and physically we are able to judge or we are able to know that whatever balance is there in our account. So now let's discuss passbook. Passbook or bank statement is a copy of the account of the customer as it appears in the bank's books. When a customer deposits money and checks into his bank account or withdraws money, he records these transactions in the bank column of his cash book immediately. Correspondingly, the bank records them in the customer's account maintained in its books. Then they are copied in a passbook and given to the customer. As we all know that we need to put a formal entry of our passbook. The machine is there at bank premises. In that we are going to enter our passbook and automatically the printing will be there. So we come to know about the statement of our particular account. Nowadays ATM machines, they are also printing our passbook. With the computerization of banking operations, bank statements are issued to the customers periodically. Now, with the help of net banking, we also come to know about the formal statement of our account. Thus, passbook is a record of the banking transactions of a customer with a bank. All entries made by a customer in his cash book must be entered by the bank in the passbook. So it is a simple one. Hence, the balances as per bank column of the cash book must agree with the balance as per passbook. Both the amount must be tallied with each other. Of course, the balance will be equal and opposite in nature. For example, if the cash book shows a debit balance of 1000, then the passbook must show a credit balance of rupees 1000. As we all know that as per the journal entry, one side is going to be credited, so then automatically second side will be debited. But in most cases, these two balances may disagree on account of various reasons. So that's all about the passbook. Here a simple picture is given that how the bank is going to credit or debit the amount in one's account. Then after, the next point is checkbook. As we already see that checkbook consists the different numbers of check in it, and with the help of this check we are able to pay a sum of money to the third person. And when we are going to issue the check to Mr. X, then Mr. X kindly deposit the same amount in their bank. So automatically the amount which is written on the check is debited in our account, and the same amount will credited to those person to whom the check is going to be written. So again, this is the basic one, as we already know that how the checks are working and the combinations of different check is known as checkbook. A checkbook is a folder or small book containing pre-printed paper instrument issued to checking account holder and used to pay for goods or services. Yes, with the help of check, we are able to pay on the purchase of different goods and different services. A checkbook consists sequentially numbered check that account holder can use as a bill of exchange. The checks are usually pre-printed with the account holder's name, address, and other identifying information. Yes, nowadays the checks are available at account holder's name, their address, and the ID proof itself. In addition, each check will also include the bank's routine number, the account number, and the check number. A checkbook is comprised of a series of checks that can be used to make purchase, pay bills, or in any other situation that requires payment. Yes, check is also known as the bearer form of cash. It is a near to cash. So, check is the another format for paying our liabilities to others. With the advent of online commerce and banking, more people are making purchases and paying bills online, thereby reducing or eliminating the need for paper checkbook. Yes, nowadays the use of check is very limited because each and everything is available online. If we want to pay something, then the online payment system is available to us, or otherwise that we can easily swipe our credit card or debit card. So now the use of check is really very limited. Checkbook includes a set quantity of numbered checks and usually contain some type of register in which user can keep track of check details and balance account statement. Yes, each and every check has its own number. The checks have their own number. So, on the basis of that number, we are able to identify or we are able to keep a record of the details or the amount which is going to be credited to other person's account. If the check is missing or if the check is misplaced by us, then definitely we are able to find out with its check number. Before being handed over in exchange for goods or services or any payment, a customer may fill out certain information on the check and then sign it. Yes, when we are going to issue a check to someone else, then first and foremostly we need to enter the date in a proper manner. Then after, we are supposed to write down the name of the person or the party's name in a proper manner. Then after, we are going to write down the amount at which we are going to make the payment. And last but not the least, a formal or official signature of the person who is going to pay the check is required, or the person who is going to issue the check, the signature of that person is highly required. Nowadays, bank also need the account number, the mobile number, and the name of the person who is going to issue the check. And these detail is going to be mentioned at the back side of the original check. So this is the process that how we are going to issue a check to the third person. The information to be filled out includes the date, the name of the individual or business, and the amount of funds to be withdrawn. Both the amount is required to write down in numbers and in words. So, on the basis of this proper detail, the chances of manipulations of cash will be minimized. So, that's all about the checkbooks. Now, here is a copy of one dummy check. In that, on a top, there is IFSC code. Now, this code is unique from bank to bank. Each and every bank has their own unique IFSC code, and this IFSC code is useful for net banking or online money transfer. It is also useful for the payment of check. Then after, in the bottom on the left side, the check number is there. Generally, it is starting with 1, 2, 3 till 30. A normal checkbook consists 30 checks in it. And then after, the second number that is on the right side is MICR code. Again, this is a unique code of that particular check. So, through this process, we are able to make a payment to the third person. Now, the next point is different forms used in bank. Yes, Other than this check and passbook, there are few different forms that are going to be used in bank. The first one is deposit challan. Now, with the help of this deposit challan, we are able to make a deposit of a particular amount in bank, and this deposit challan is useful to deposit any cash or any check in our bank account. So here a photocopy is there on the screen. In that we are supposed to write down our account number, then after the name of the account holder, then after the amount that we are going to deposit, both in number and both in words. Then after the official signature is required. A mobile number is also required. If the amount is more than 50,000, then a PAN number is also required to mention in our deposit challan. The second one is withdrawal slip. When we are going to withdraw money from our own account, so for that purpose, the person is supposed to fill up this slip, that is withdrawal slip. Again, in that we are going to write down the account number, the name of the account holder, then the amount in words and in number, then after the mobile number and the official signature of the person who want to withdraw amount from its account. The third one is demand draft. So now let's discuss what is demand draft. It is just like a check. In that you can see the name of the person. First and foremostly on the right hand side on the top, the date is there. Then after the name of the person, then after the amount in words, and then after the amounts in number, and then after the official signature of the person, and last one, that is the DD number, that is demand draft number. Now basically the name itself suggests that is demand draft. Demand draft is nothing but it is a negotiable instrument issued by the bank, and through this negotiable instrument the amount is going to pay to the particular person on the basis of their requirement. Means when the third person want to use this demand draft in January, then that is possible. He is going to demand the same when he is in the need of money. So simply the person gets the money when he is going to demand in the bank. Now let's discuss it. A demand draft or a DD is a negotiable instrument issued by the bank. The meaning of negotiable instrument is that it guarantees a certain amount of payment mentioning the name of the payee. It cannot be transferred to another person in any situation. Yes, we cannot sell our demand draft to anyone else, or we are not in position to transfer the amount of demand draft to anyone. So there are few points of demand draft. One by one we are going to discuss it. The first one is the bank issues the draft to a client directly another bank or own branch to pay the specific amount to the payee. Yes, here the draft is going to be issued by bank to bank. So, if the bank of both the parties are different, then here both the parties are not going to worry about it, but the bank is going to issue the demand draft to directly the another bank in which the third person's account is there. Demand draft can be compared to checks, but these are hard to counterfile and more secure. Yes, it is like a check, but it is not a check. If we are talking about the security, then the demand draft is more secured as compared to check. This is because the drawer has to pay before issuing a demand draft to the bank, whereas check can be issued without ensuring there's sufficient fund in your bank account. Definitely, if in my account I have 50,000 rupees, but suppose I am going to make the payment of 70,000 to Mr. A, then definitely I will write a check of rupees 70,000 to Mr. A, and here bank is not going to pay the role of investigator in it, because bank is not responsible, or the bank is not going to make a cross examination that whatever balance is with us, and when the check is going to be bounced, at the same time bank and the third person come to know about that this person is not going to maintain a sufficient amount in their account. Therefore, checks can be bounced, but draft assure a safe and on-time payment. The drafts are payable on demand. It cannot be paid to the bearer, but the beneficiary has to present the instrument directly to the branch. It can also be collected by the clearing mechanism of the bank. Mostly, demand drafts are issued in situations where the parties are unknown to each other and lack of trust between them. It comes handy in such situation as there are almost no chances of fraud and counterfeiting. Yes, when the both parties are totally unknown to each other, at that time the demand draft is highly preferable by the two parties, because when a person is going to issue demand draft, then first and foremostly bank is going to make a cross examinations of the amount which is written on demand draft. If the person has a sufficient amount with it, then and then the demand draft is going to be issued by bank to the third person. The draft facility is available for people regardless of them having a bank account or not. Anyone who want to pay a certain amount to an institutions or to someone with a proof of payment can issue a demand draft. Individual can visit the bank and ask for a draft form, or they can also fill the form online. Yes, definitely now demand draft facility is also available at online. The amount mentioned in the form can be paid either by check or cash. So this is the process of demand draft. Now here you are going to remember only one thing, that when we are going to issue any check, the cross examination is not required by bank. So check is not highly secured. But when a person is going to issue demand draft, at that time a legal stamp of bank is required, and the bank is going to make the cross examinations of the amount which is written on demand draft. If the person carries the same amount, then definitely bank will pass the application of demand draft. If the sufficient balance is not there, then definitely bank will reject the demand draft. So demand draft is highly secured as compared to checks. So that's all for today's session. I hope it is clear to everyone. Thank you. Thank you so much.